All right, let's talk business now with Thomas Hayes. He's the chairman and managing member at Great Hill Capital. And it's great to have you with us, Thomas.
Thanks for having me, Michelle.
All right, Thomas, we've got the S&P 500 down 6.3% over the past 2 days. We do have a number of companies issuing forward guidance of lowered revenues. But overall, is this sell-off an overreaction? Do you expect much damage beyond, say, a quarter of missed revenue?
Yeah, I think the market will start to look through this. We've had, it's a human tragedy, of course. We've had 2,400 deaths. But if you put it in perspective, it's less than 7% of the deaths that we're going to get from the regular flu this year in the United States. So what we need to see, and everyone's focused on Italy and Iran, what we need to see is that China has already plateaued. So you had 900 new cases on February 3rd. You had 9 new cases yesterday outside of Hubei province. So if we can start to see things contained, we know we have the Gilead drug. It just has to be approved for this specific use. And we see that in other regions. I think the market will look through this.
All right, but Thomas, arguably it's not about the death rate per se. It's about the way authorities around the world have been responding to this, shutting down factories, putting quarantines in place. It's not so much the death rate that's the problem, but the way that authorities around the globe have been reacting. Now, Larry Kudlow says he's not concerned about the coronavirus in the U.S., that it's not going to impact U.S. GDP. What would need to happen for it to actually impact U.S. GDP?
I think if you see an acceleration of cases outside of China and it looks like it can't be contained and you see more and more shutdowns, that's going to impact things beyond Q1. So we saw last week with Apple coming out with guiding down. The market started to fear that late week that more and more companies would come and start to guide down. We just need to see an end game. And this kind of reminds me of, it's very hard to quantify at this particular point in time, like we had during the Euro crisis in 11-12 until Draghi stepped in. So once we see some stability that can be quantified, the market can look through this for the next 12 to 18 months.
All right, well, you mentioned Draghi, and of course there's been a lot of speculation that there will be central bank action, potentially something even from the Fed. Do you anticipate that happening? And at what point do you think that Jay Powell will find it necessary to take some kind of action?
Well, it's actually already happening. So we've got $415 billion of liquidity that's come into the market since August. He's going to keep the pedal to the metal. We saw today in the repo market that it was oversubscribed. They'll continue to add liquidity. The market is discounting cuts. I don't know that we're going to get cuts unless this gets much worse, particularly seeing China plateau. And now we'll be able to manage it in other markets. So the Fed stands ready to act. China has added huge amounts of liquidity to the market, and the factories are opening in many parts of China.
So you've got stocks like Apple and Facebook hitting correction territory, down over 10%. Is this an opportunity to step in and buy, to quote Warren Buffett, be greedy when others are fearful?
I think you've got it exactly, and I think it's with caution. So we started to nibble today on defensives. So very, very carefully in stocks that were already starting to come down and were already trading at low valuations, got hit a little harder. So defensives, in our case, we nibbled on Pfizer, for instance. We nibbled on Altria. These are stocks you go to when you're not full out confident. They're very large companies. They're very defensive. And as things start to settle down, now going into this, we were trading at 19 times forward earnings. The market needed the excuse to sell off. And so the most crowded trade, Bank of America did a survey last week. The most crowded trade right now in the market is U.S. growth and U.S. tech. So is that the place that I want to go into right away when there's tumult? No, because there's going to be the most number of people hitting the exits on those stocks first. I would wait on those stocks, go with the conservative ones, nibble first, start to get a sense of the quantification of the problem, and then as things start to stabilize, you can get your chance at some of the higher flying stocks.
All right, Thomas, thanks for that breakdown. Thomas Hayes, good to have you with us.
Thanks.